JB here, July 25th, 2024, 8:53 a.m. on this fine turnaround Thursday, maybe. We'll see what happens here. This morning we got the GDP, the first read on second quarter GDP came in a tad higher than expectations. So I guess that could help dispel some of the headlines and narrative that was going on yesterday in regards to recession. And then tomorrow we get the PCE data. So that could be the next catalyst for markets. Next week is the Fed meeting, so not sure that the PCE data is going to do too much ahead of that, but who knows? But what a pretty crazy day. The S&P put an end to its, I think it's 350 plus day session streak without a 2% losing day. So that was put an end to yesterday. The Nasdaq tumbled the most since 2022, over 3% yesterday as well. A lot of it on the heels of Tesla and Google, which Google actually had a beat on both ends, but there was some concerns, I guess, about margins towards the end of the year, the AI spend, um, things like that. So just almost like folks need an excuse to take profits. We're still not too far off from all-time highs, so pullbacks are expected. They're normal. Just unfortunate when they do happen, and to the extent that they do happen so quickly, that makes it tough, especially when you're in call position. So, I was talking about on the watch list yesterday. 544 and 541 were key areas. Uh, no, excuse me, 554 and 551. And then once 551 broke, I thought possibly down to 541, and I didn't think it was going to happen this quickly. It happened. It happened yesterday. Closed at 541.23 after a little bounce. So be watching that area. Hopefully we can hold above that. Otherwise, 535 is probably the next stop. And also the 50-day moving average on the SPY is 540.64. So key area, key day today. I guess every day is a key day after a big sell-off. See if markets can muster at least a bid and recoup or hold the levels. Some silver lining, and the small caps were green for most of the day yesterday, or on and off before succumbing to the pressure. Uh, if you look at the daily chart, it still doesn't look too bad in July. So some consolidation, some chop. If finally small caps can start getting back over those highs, 222 is the key spot on IWM. Gets back above that, maybe can start the to put the rest. A big correction is coming. The calls for the correction. And then last but not least, there were some sectors that were green yesterday, and one of them was the IBB, the healthcare sector, and the biotech sector. Biotech's just squeezed out a game, but were solidly higher for most of the day. Impressive. And then some of the names in that space, I think, was Regeneron, Biogen, were green yesterday despite the market. So again, maybe another good sign that biotechs are ready to start the next leg, which I've been waiting for. Similar, I've been waiting for the small caps to outperform. They finally start to do that, and now maybe it's the biotech's turn. And biotech has been running up with the IWM anyway. And then nice slide. This is from Ryan Dietrich on FinTwit, but he was talking about just helps keep things in perspective. That there's typically a 3% dip from highs that happens 7 times throughout a year on average since 1928. So, uh, put it in perspective, we've already had a 5% decline in May and then a 3% decline just now. So helps keep things in perspective when everybody's calling, fire in the movie theater when there's no fire. Eventually there'll be a fire, right? And so I'm not saying that this is just a short term, 100% just a short term pull. And we're going to head back to highs in the coming weeks. It's always good to have hedges and to have support resistance levels to kind of give you a guide so that you don't get caught with your pants down when we do get a pullback. But more times than not over the last 12 years, buy the dip has worked. So I'm not saying right now is the buy the dip, but those are the levels I'm looking at. So individually, and first I'll talk about gold. And gold hit 24.33 yesterday in the morning, sold off to 24.15, still closed in the green, and now it's down 2%. And silver's getting destroyed this morning as well. I think silver's off 5 or 6%. I can go on a rant for about an hour about gold, and I've done little snippets of my narrative. But back in 2008, 2009, the whole narrative around gold was it's an inflation hedge, supposed to protect against inflation. When the dollar goes up, gold should go down. When the economy is bad, gold should go up. When there's recession, gold should go up. Foreign banks and central banks are holding gold, so because of that, gold should go up. ETFs have come out with gold, so they have to hold gold, so gold should go up. So there's all these narratives But then you flip it around, and I think all those narratives, they've already come to fruition, right? And now gold has rallied, and it's a store of value. The only there's no utility value. I guess there's, I don't know if they still do them for cavities, but it's just a store of value, right? At least silver has some utility value. Uh, so it's just valued as much as someone else is willing to pay for it, right? So I mean, you could say the housing sector is similar, but there's utility of it. People live in it, right? There's You can do a lot of the stuff with it. So again, I'm not saying that gold shouldn't be valued where 2300, 22, 2500. I just think there's an opportunity right now for some downside. And you look at the consolidation since April, it was up to 24 in April, back down to 23 back in May, back up to 24 here just recently in middle of July. I think it heads to 2,300 bucks, and if not lower. So, and most people, if you go and look of analysts and things like that, most people aren't calling for that. They're calling for 25, 2,600, 3,000. Peter Schiff has been calling 10,000 since 2013. So obviously, I think it's more skewed and biased to the upside, which leads me to believe I think most people, if it continues to drop, are going to be caught. So I still have the GLD August strikes. I'll hold on to those depending on what the price is at the open. I'll look to cover some out for 100% when I get the chance there. A Nugget, which was actually in the money just a minute ago. I still have those 42 puts. I already sold some of those for over 100%. I'll probably look to close the rest out today and then add some later strikes. I think if you look at the chart on Nugget, I think it heads 37, maybe even 36 in the coming week or two. So I'll continue to look for opportunities to play that. And then the other ETFs that I always look for, uh, Dust and J Dust, which are triple double bear miners, and then the GLL, which is a double bear ETF for gold, which I think is at 20 bucks right now. If gold drops down to 2,200 bucks, GLL will be 35 bucks. And the calls are so cheap right now. There's no premium in them. Could be a nice speculative call play. All right, so enough on gold. Yesterday I was looking at some hedge plays, and I always say always be hedging. And names I'm looking at would be Lam Research and Broadcom. In hindsight, I should have got the Broadcom puts. I was saying this yesterday afternoon. I went and got the Lam Research puts. They still worked out. I covered some out for 100%. They were up 300% at the close. I don't know where they're going to open up here. The stock is up about 10 bucks. They'll probably open at 2. So I might just look, depending on what the market's doing here at the open, I might look to just take, I only have a couple. I might look to take the rest off and then just revisit with some other type of hedge if the market breaks back under 541 on a SPY. But you start looking at areas on Lam Research, and back in May was at 875, and it just broke the lows from July here on ASML earnings. So a big spot here at 900. So if it breaks under 900, I think 875 comes quick. So it's just the premiums will erode also on a bounce. So if we have a big bounce, the premium is going to evaporate because they expire tomorrow. So be a wait and see kind of situation with the Lam, but at least I'm riding free. Spotify rallying yesterday after the open. I was looking for calls the day before on its earnings. The stock gapped up and then faded, still closed up, what was it, 15%. But then yesterday, all the upgrades start to come in. The stock was rallying. I went and got some of those calls, locked some in for 100%, and then it fades for the rest of the day. Actually went red for a little bit into the late afternoon before bouncing. Still like that one. If the market finds some footing here, I may look for some strikes into next week to play the blue sky new high begets new high breakout, which should be up near 360. VKTX had earnings after the close yesterday. And I was talking about it on the rant yesterday as well. I didn't want to pour salt on my wounds by adding strikes on a line and VKTX into the earnings, especially with VKTX. It's really just about updates. But of course, what does VKTX do? They did issue some updates. One is that the FDA approved them to skip the phase 2B trial for their injectable GLP-1 drug and go right to phase 3. So that's right there by itself is a huge, huge deal. So that's just going to bring forward if you're an analyst, you have to think about the cycle for all the studies and for a drug, phase 1, phase 2, phase 2B, whatever it is. And the fact that they're able to skip straight to phase 3 probably takes out six months to a year on that drug cycle. So that's huge news. They also talked about dosage. So they might be able to do 100 milligram dosage. And they said there's been no adverse effects with that. And then also they talked about doing a monthly injection as opposed to what Wegovy and Ozempic and Zepbound do right now is they do the once a week injection. So pretty remarkable if they're able to come out with studies that show that not only effectiveness, lack of zero adverse effects, things like that. So huge deal. The stock was gapping all the way up to 64 and change in the after hours yesterday. pulled back. It's sitting here at 58 bucks. I'm going to look for something into September. I don't know what the premium's going to look like. The calls will be green. I just don't know by how much, but they were kind of expensive yesterday. So if they do come out, maybe I'll look for some September strikes and go from there. But great news. Just it seems like great news after great news for Viking, and it just sits here and still has 15 million shares are sold short, which is still like $1 billion of stock out there that someone's holding, betting that it's going down. And I'm like, yeah. Anyway, rants for other days. All right, so VKTX. iRobot, thankfully, I was actually almost green for most of the day before pulling back into the afternoon. Yeah, I think 11.98 at 1 o'clock. It was almost at 12 bucks, and then faded for the rest of the session. Still like this one for upside. I'm not gonna add anything just yet on these names. Gilead was surprisingly strong yesterday. It's up here at 74 again today. I guess the pricing of their HIV drug was 41,000 bucks. I don't know if that's some of it. Uh, but I still have those August 80s. Those are coming back, and I might look for some more strikes to play for a move to like 82.50, 83 in the coming weeks, especially on some strength here, and especially if the biotech sector is back on fire, right? That's that. And then last but not least, here is Roku. Roku just so disappointing. I mean, got absolutely pummeled yesterday, down 10%, giving back most of the gains from its mid-June rally. Not going to add anything. They have earnings a week from yesterday, I think it is. And it doesn't make sense to just add more because, if they do report a nice beat and raise and the stock gets soars, my calls will do just fine. I've already made some nice profits on it. So no reason to chase after that. Also disappointing Square, Unity, Baidu, just disappointing as well. Still waiting on when I say Square, it's Block. Still waiting on when they're going to release earnings, which they still haven't updated their date. Same with Unity. Unity was actually looking good yesterday. I think it was all the way up to 17 in the morning. Do I have it here? Yeah. It's 17.18 at 9:40 yesterday morning and closed at 15.60. It's very disappointing. And just one little note, and I put it on the watch list this morning. If if you've done this long enough and you've been through all the times in 2008 with all 2008, 2009, COVID, 2013, there's been all these times where there's been volatility. 2015 with China. In the options world, when you're trading in a volatile market and you have large positions on, large can become small very quickly. I mean, I'm just not. This is Captain Obvious speaking. Hi, this is your captain speaking. But on the flip side, small can become very large very quickly when things are volatile, especially when you're closer to 0 days to expiration or 1 day to expiration. The thing is, as the VIX starts climbing up and it's at 18 and change, the premiums start creeping up too. So then things aren't as inexpensive as they once were. So it costs more to try and trade things. So sometimes, and that's why I always say always be hedging, because if we do get some crazy volatility, especially to the downside, and you're in some puts, you get the double whammy of the premiums going bonkers, the VIX going bonkers, so that exacerbates the premiums, and then the stock going in a direction if you have the puts. So to me, and I always see these people, they post, 500 contracts, all these large positions, but in the option world, the reason you trade the option, or at least why I trade, is for the leverage, right? Because if you're in a position and you have 10 contracts and it expires to zero, you have your finite risk, right? And your risk is already defined when the trade happens, but you have almost, I wouldn't say infinite, but you have to potentially make many hundreds of percent of gains. And that's why I trade the options. So to me, it doesn't make sense to go all in on a trade, because that's not why you trade the options, right? All right. Another rant for another day. I'm just so you can get my thought process around some of the things I do. When I get these hedge puts too, it's more to offset some of the call positions that are, taking it on the chin, which happened yesterday. So that's it, folks. I'll be back on audio later. Let's have a great day. Hopefully a much better day today. Rock and roll.